files are in the computer. The files are in the computer. What's going on, Investomaniacs? Knight Rider here, and it is 6:21 in the morning, so I got to be a little bit quiet. Anyways, here is your Robinhood stock market update. YouTube, we're on YouTube. It's like so meta. YouTube is considering major changes for kids because it's under investigation. This is why babysitters need references. According to WAPO, the FTC is investigating YouTube, which is owned by Google, for violating children's privacy. YouTube has a history of conduct parents would not approve of, and the Wall Street Journal reports that YouTube's considering two big changes to try to fix its kid problems. YouTube Kids, pushing all kids' content to a separate children's app, insulating them from videos that would keep you up at night. Kill the autoplay. Parents can put on a wholesome, dude-perfect video for the twins, only to be smacked by something totally R-rated right after. YouTube could cut their risk by cutting its favorite feature. One of the best buys ever. YouTube. Google dropped $1.6 billion for a budding video website back in 2006. Today, it's estimated to be worth between $75 and $160 billion. YouTube says humans are watching 1 billion hours on it daily, generating billions worth of ad dollars. And I'm getting about like 20 of those dollars, but it's also been used for child exploitation and can radicalize people. The takeaway? When kids need regulation, it actually happens. Paralysis in DC is constant, but children's safety is bipartisan. Google could be preempting future regulation by regulating itself for the kids. A couple fresh examples of kid-catalyzed business regulations. Since 2018, new cars are required to have backup cameras. The reason? Protecting toddlers from backing up cars. This week, San Francisco voted to ban the sale of vape products, and there is a growing push to raise the tobacco age to 21. The reason? Protect the kids. Up next, we've got Grocery Outlet, a store that I personally have loved as a former broke person. Grocery Outlet is the non-Slack new stock listing to know about. We'll cover Slack later on, but for now, Grocery Outlet earned your attention today. The 73-year-old chain is the nation's fastest growing extreme value grocery retailer. Picture Trader Joe's meets Dollar General. 300 independently run stores generated $2.3 billion in sales with prices that are 40% under regular old conventional grocers. Here's how. The secret sauce. Strong supplier relationships. 30-year average connections with 15 key suppliers. Grocery Outlet buys their foods when other grocers won't. The not-so-secret risk? Relationships can end. They do end. And Walmart, Aldi, and Amazon's Whole Foods can build supplier relationships as well. One word. Wow! We noticed this term 48 times in Grocery Outlet's pre-IPO paperwork, aka its S1, describing its values, business model, and risks. Turns out, wow! Is how Grocery Outlet promotes its Powerwall, which is also a real thing, its Powerwall of top deals hitting you as soon as its automatic doors open. Here's how else it energizes your weekly guac run. Deliver a treasure hunt shopping experience with extra wide aisles and ceiling-high packs of anything. Then it makes its cashiers circle the savings with a marker on your receipt. The takeaway? This is the convergence of two major retail trends: extremification and experiences. Society-wide income inequality is driving high-end luxury retailers and low-end dollar stores to record-high stock prices. Meanwhile, stores that are actually fun to go to can get you off Amazon. Grocery Outlet covers both. And last, we've got PDF legend Adobe, which just hit a record high on record profits. Hate TPS reports? You'll hate this story. Adobe, the digital design company that invented the PDF, has quietly grown to $130 billion in value by market cap after setting a record quarterly profit of $2.7 billion. Its mission statement is bold, but a little confusing. Adobe gives everyone, from emerging artists to global brands, everything they need to design and deliver exceptional digital experiences. Okay, maybe it's slightly vague. It makes money because digital things need to look good. Adobe is a SaaS company, software as a service, that brings in monthly revenue for its software, mostly from businesses. The PDF, you use it and hope it's Control+F able, so you can find keywords. Adobe invented it back in 1993. Adobe Illustrator, for professional designers who choreograph the graphics in whatever app you were just on. Adobe Photoshop, the photo filter before photo filters were a thing on Instagram. Adobe Spark Post. This new-ish app was built with social media in mind, offering small businesses beautiful templates to easily turn into shareable biz posts. The takeaway: Adobe's profit margins are why investors love software. Every buck Adobe earns in subscription revenue costs it only 15 cents to produce. That shows how software is way more scalable than a car. General Motors costs are much higher. Think equipment, factories, at 93 cents for each dollar of a sale. Profits come easier when adding a customer only requires a new username and password, instead of metal and four wheels. And here is your snack fact of the day. Although Facebook copies a lot of things, they don't always work out. Here are 3 Facebook products that they copied from other companies but failed. Number 1, Places. Back in 2010, a location-based copy of Foursquare lasted 1 year. Number 2, Deals. In 2011, a daily bargain feature copy of Groupon lasted only 4 months. Number 3, Slingshot. In 2014, a self-destructing copy, kind of like Snapchat, and that lasted a year and a half. Anyways, guys, that is your Snapchat, not your Snapchat, your snack update of the day. Hope you guys have a good one, and may the market be ever in your favor.